Bonnie, our next guest says the biggest market risk is in eurozone bonds. Daniel Lacalle, chief economist for Spanish asset management firm Tresis, joins us now on set. Good afternoon.
Good afternoon.
It's not just been Italy today that we've seen spread widening. It's also Spain. It's also Portugal. Are we starting to see contagion?
Well, I don't think it's contagion just from Italy. I think the problem is that these countries have all but abandoned any reform in the last, particularly 3 years. And what happens with these economies is that the new governments are trying to push a very aggressive agenda of increasing expenditure while at the same time having a more than optimistic assumption of revenues. So risks when the ECB support is starting to fade and at the same time your imbalances are rising, obviously come in the shape of bond markets and spreads widening. And even so, with the ECB support, the spreads are extremely low. It is very, very unlikely that investors will buy bonds at these yields when the ECB stops buying them.
Okay. So where does that leave the ECB? Does the ECB stop buying them, I guess is the question I would ask.
Well, I think it has to, no, because the ECB finds itself between a rock and a hard place. On one side, if it doesn't do what it has said it will do, the signal that it will send to markets is that things are a lot worse than they seem. Because obviously, if they don't start normalizing the policy, what will end up happening is that they run out of tools when the cycle changes. Additionally, on the other side, if they continue to buy at the same, if they continue to buy, what happens is that these countries that are pushing for a more aggressive spending, more aggressive deficits, then what they're going to end up doing is entering into the same imbalances of 2009. So it's a very difficult position for the ECB. The ECB needs to do what they have said that they will do, and the governments in those countries need to come back to a reform agenda.
Daniel, the Italian-German spread is closing in on 326 basis points now. At what point do we need to be concerned?
Well, I think that this shows that despite the fact that the ECB has been the only buyer of Italian bonds in the last months, the risk actually happens, and the risk actually is very evident in the spreads. So we need to start being really concerned, because despite the fact that the Italian government has tweaked a little bit the budget, the reality is that spreads continue to widen. More importantly, I think that we have to be worried because the spreads of corporate bonds in Italy and the spreads of high yield are also rising quite dramatically. So I think that we need to start worrying now, because it doesn't seem like the government is willing to come back to a sort of fiscal balance type of situation. And more importantly, as the eurozone slowdown is more evident, the fact that those estimates of tax revenues that have been presented in the budget were already questioned, it becomes a lot more evident, becomes a lot more clear that it is very, very challenging to achieve those tax revenues, so the deficits are likely to be higher than feared.
Right. Now, at what point does this become crippling to the Italian economy and then seep over into the European economy?
I think that what basically we have to pay attention to is the banks, obviously. The Italian banks, pretty much like Spanish banks, are very exposed to sovereign debt. And therefore, the contagion tends to happen through the financial system, as we saw, by the way, also in 2009 and 2010. So as the yields rise and obviously the value of the bonds weaken, what happens with Italian banks is that they either have to buy more sovereign bonds when the ECB stops purchasing, or the spreads will widen even further. And what that leads to is sort of a domino effect into the real economy. I think that the risk is on a eurozone that is already in slowdown mode. What this leads is to lower and slower credit growth, and what many people are looking at with quite a lot of interest, which is rising non-performing loans.
Are BTPs investment grade?
Yeah.
They are now.
They are now, but the issue is The issue is not whether they're going to be deemed as investment grade. The issue is, like in the previous cycle, is the market going to accept them as investment grade? That is the problem.
What's the credit risk associated with BTPs?
Well, I think that basically the biggest risk is that. What is happening right now is that you have, on one side, you have a slowdown in the economy, while at the same time you have a weakening of the credit spreads. So what you end up seeing is that the biggest risk that you face right now is that once the ECB normalizes even moderately its policy, that there is no secondary demand. That is the big issue.
If I buy a BTP today, let's say I buy a 10-year BTP today, what currency am I going to get paid back in when it matures?
I think that there is absolutely no eurozone bond right now that is discounting the risk of a currency redenomination, but you will probably get it back in euros. I don't think that there is any risk of the euro breaking up, precisely because governments finally understand that there is no secondary demand for their bonds. So even if you think that, all these things that the Italian government says all the time, that Italy has a primary surplus, that it has lots of savings, etc., the reality is that it wouldn't be able to finance even half of the deficit that they're talking about right now, even less so if it redenominates in lira or in peseta or in escudo portuguese or whatever currency you want to reinvent. There is no secondary demand. There is no market demand for any peripheral currency. And obviously, the reason why bonds are getting bid at this level is because if there is any risk of the euro breaking up, what you would have is a redenominated in Deutschmarks, which actually would rise dramatically, no?
All right, Daniel Lacalle, Trustee Chief Economist, thank you.
Thank you very much.